Joining us now, Bill Nygren, Oakmark Funds portfolio manager, and thanks for joining us today.
Thanks for having me,
Mr. Nygren. So many things to talk about. We'll get to what you do and what you're doing now in a second, but we always do revisit some of our history. This doesn't go back 30 years. We're doing a lot of reminiscing this week, but 24 years you were on the set today. With Mark Haynes when the first plane hit the tower, and I'll never forget that and how everything changed.
Yeah, I don't know how anyone could forget that. I was in Chicago. That's where Harris Oakmark is located, and it was my son's birthday, so I wasn't traveling. Happy birthday, Mark! And on set, I hadn't had a lot of experience on TV interviews at that point, and I tended to ramble. And Mark Haynes would always interrupt me, and it was something I was trying to work on. And I think I was talking about cable TV stocks. And Mark goes, "Bill, I need to interrupt you." And you can see on the footage that I kind of roll my eyes. I was so disappointed in myself that I'm talking too long again.
Different this time.
And then, of course, cut to the World Trade Center and went back to our office where our traders, we didn't have squawk boxes because we're a buy-side firm, not a sell-side firm with lots of offices, but we had direct lines. And they had an open direct line to Cantor Fitzgerald where they had friends there that were saying goodbyes. So very, very sad day.
We have to do this every year so that we don't forget on September 11th. But getting back to what you do, you were I think you were a 5-star back then, or however we rank, and you still are, I think, right?
Well, it's interesting how today kind of rhymes somewhat with where we were 24 years ago. Oakmark had a really good recent track record in 2001 because we hadn't participated in the technology boom.
That went bust.
Yeah, the large cap boom that was going on back in that time. And we didn't think the market was expensive because the sector of the market that we played in wasn't. And it's kind of the same today, where people will say the S&P is at a mid-20s multiple and that looks really high by historical standards. But the S&P isn't the broad-based index it used to be. It's really a technology growth fund. With Oracle's move yesterday, 9 of the 10 largest names in the S&P are technology names, and the 10 largest are 40% of the market. So even though the market has gone in the past 7 years from a upper teens multiple to a mid-20s multiple, 7 years ago there were about 150 stocks under 14 times earnings. Today there are about 150 stocks under 14 times earnings. And that's more what Oakmark invests in. And I think we provide a pretty good counterbalance today to someone who's got a lot of S&P 500 exposure. It's heavy technology weight. It's concentrated in a handful of names. And our portfolio looks nothing like the S&P, acts nothing like it. And I heard David Rubenstein on earlier talking about how much the market was up over the past 30 years. The S&P's returned something like 18 times, but more importantly to individual investors, their real assets grew by about 8-fold over that time period. And I think investors need to get back to looking at, can equities help them grow their capital so that they can meet their financial goals, their retirement goals, sending kids to college. And whether or not that keeps up with the S&P 500 isn't as relevant because that is no longer the broad-based representation of companies across the United States.
You got to do stock. I mean, is there anything else? Is there any other option if you have 30 years to invest? There's really nothing else, is there?
No, I don't think there is, and it's amazing.
Real estate, maybe real estate, I don't know.
I mean, when you think back over the 30 very successful years that Squawk Box has had, how much time is spent on trying to figure out if this is the moment you should be out of the market.
Right.
And that's just something we don't do at Oakmark. Follow more of the Warren Buffett type approach that says you want to hitch your star to the success of the United States. And that's worked out very well.
Yeah.